Okay, moving on to chapter 2. 2.1 is departmental sales on account and sales returns and allowances. So we have 3 learning objectives. You need to be able to explain the purpose of a departmental accounting system. You need to be able to journalize and post departmental sales on account using a sales journal. And you need to be able to journalize and post departmental sales returns and allowances. So on this first one, departmental sales on accounts, managers use departmental data to make decisions relating to business operations. So they're going to look at that information that we are keeping track of to figure out, okay, what do they maybe need to order more of, or what do they need to change? In order to have comprehensive departmental data, however, a business should record sales and cash receipts data separately for each department. The realization of revenue concept states that revenue is recorded at the time goods or services are sold. So remember concepts, this one, realization of revenue, this is just saying we want to make sure that we are recording that revenue the same period that that good or that service is sold. All right, so journalizing our sales on account, it says on July 4th, we sold a grill on account to Lynch Construction, $985 plus sales tax of $59.10 for a total of $1,044.10. The sales invoice number 793. Now, we're used to doing a sale on account. Really, the only difference here is that we're going to sell, we're going to have different departments for our sales. So when we look at our sales journal now, we have our sales credit, which we would normally have, but now we see that we have grills and furniture. So in this case, we're selling a grill, so we want to make sure that we put it in the correct department. That is our sale. Here is our sales tax payable, and then the total amount is debited to our accounts receivable. And then our customer is listed here in the account debited column. Proving the sales journal, this is nothing new either. To prove, we are going to add up each total, or add up each column, sorry, and write the total in that column. We're going to add the debits and make sure that our debits equal our added credits. Okay? Once those are verified, we would double line rule. We want to make sure that we have our date and that we have it labeled as totals as well. Posting from our sales journal to a general ledger account. So this is when we are posting our totals. So we are going to start with our date. So here they're just showing us that when we're posting a total, we're going to look at our column heading. This tells us what account we're going to. So here we're going to accounts receivable. We start with our date. We're then going to put in where we got this information. So S7 stands for sales sales journal, page 7. We're then going to put that as a debit. Remember, we look at the column heading. It is a debit. Then we're going to find, we're going to find our new balance. And then the last step is we're going to bring that account number up underneath that total showing that we've posted. And we're going to do that for each of these totals. Journalizing the sales returns and allowances. What they're showing us here is a credit memorandum. This is a form that's prepared by the vendor showing the amount deducted for returns and allowances. So here we see this gas grill for $295 for a total of $310 or $312.70. So we use that credit memorandum then for our general journal. This would go into our general journal. We start with our date. We're going to debit sales returns and allowances grills. So this is important that we label this as grills. We want to keep track of each department, how many sales returns and allowances there are. Okay, then we have our sales tax payable. And then we have the account receivable. So the account receivable is Taylor Apartments. We need to list both of those. Remember, if we have a slash here, we'd put that into our post reference as well because we'd be posting twice. Okay, an account that reduces a related account on a financial statement is known as a contra account. We should know that. An account showing deduction from a sales account is a contra revenue account. So what they're talking about here is our sales returns and allowances here. That really ends up reducing our sales account. That is a contra account. Okay, we want to keep those two separate. We want to keep sales separate from sales returns and allowances because we want to keep track of how many returns and allowances we have. So there they just stated that again, sales returns and allowances, grills is contra revenue account. Sales returns and allowances are kept in a separate account and not deducted directly from the sales account so that we can keep track of that. This procedure helps the business see what proportion of the merchandise sold was returned by the customers. Okay, so the last thing that they're showing us is the posting from the general journal. Again, this shouldn't be anything new to us. This is posted individually, so we would look at each line as to what account is posted. We do see here on our when we find our Taylor Apartments, that is going to go to our customer account. So that would be going to our accounts receivable subsidiary ledger. All right, question number 1. What is a benefit of recording sales and expenses by department? Information such as departmental gross profit from operations can help business managers decide if each department is earning an appropriate profit. So in the example that we were looking at, they had grills and then they also had furniture. So we might be able to keep track and maybe we realize that we don't have as much sales in furniture and then we can look into what do we need to change, what's going wrong. Okay. Number 2, what is a tax exempt customer? And then give an example. A tax-exempt customer is not required to pay sales tax. So examples would be any federal, state, and local government agencies, not-for-profit, educational institutions, sometimes or certain religious and charitable organizations as well do not have to pay taxes or sales tax. Number 3, what is the source document for a sale on account? That would be an invoice. Number 4, how does the realization of revenue concept apply to the recording of sales? Sales are going to be recorded at the time of sale regardless of when payment is made. So even if we are not receiving cash, they are buying something from us on account. We still record that sale. And last question, number 5. Oh, excuse me. For what purpose is a credit memorandum issued? A credit memorandum is going to be issued by a vendor, and that's to show the amount that's deducted from the customer's account for returns and allowances. That was the end of lecture for 2-1. You can now go to the 2-1 work together.